Hey guys, it's Bronson. Have you wondered if you should use your retirement account money to invest in actual physical real estate? So maybe you made a lot of money in the stock market, or you found other ways to just make some money. You're thinking, man, I just see some risk here, right? There's so much risk of inflation and what happens if the stock market crashes. And can I use all this money that I've got in my retirement account to be able to invest in physical real estate? And a lot of people would say, no, you can't do that. A lot of investment advisors would be like, no, you can't do that. Well, the problem is investment advisors have interest to keep you in Wall Street products. I know I'm a recovering investment advisor. I know I can be honest with you because you just seem like you're trustworthy. So I'm just going to just lay it all out and be honest with you. But I've spoken with over 1,200 individual investors having this conversation about real estate. Many people are interested in using retirement money to invest in real estate. And I want to say it absolutely is possible. There are a few things that you really need to know to make sure that you take advantage of it in the right way, the compliant way. You watch out for some penalties and you do things that are correct. So we're going to jump right into it. Really excited about this. Let's go. All right, so first of all, as we get started, I want to say I am not a financial advisor anymore, and I'm not your financial advisor. This is simply educational, so that's my disclaimer. Obviously, make your own decisions, consult your own professionals. But I want to say about this game is the money game, right? So the money game, Tony Robbins came out with this book. It's called Money Master the Game. And my opinion is any game, if you want to be a winner at any game, is just don't suck, right? Just don't play poorly. Just don't do it the wrong way. Do it in a way that you can win the game. So how do you not suck at the money game? And particularly when it comes to real estate or retirement investing and doing real estate through that. First thing is you need to get the right type of account. So if you have just a regular company plan, which most people do, you probably have some sort of company plan, a company you work for or a company you used to work for, and just a regular 401k really will only allow you to invest in Wall Street products. That means stocks, bonds, other sorts of financial paper assets, even Reits, which are real estate investment trusts. That's not really owning physical real estate. It's owning a Wall Street product that kind of substitutes for the actual physical thing. Another thing about REITs I want to say is that REITs, if you own a REIT, the market goes up, your value is going to go up. If the market goes down, you're going to go down with that ship, just as Dido sings, right? But I will go down with this ship. So, it's really important that when you look at your investing, you're doing things that have some sort of margin of safety, some sort of value add component. So Warren Buffett talks about a margin of safety. In multifamily investing, one way that we use this principle is that we do what's called a value add approach. We come in and we basically do particular renovations on a property. We come in, we renovate, spend $10,000 per unit. We see a rent bump of maybe $150 to $200 a month. That gives us some margin of safety that if things start to go down, we've at least increased some value there. And so it allows for higher returns. And then even if things don't go well, it still has higher returns than if you had it just where you're owning the market. So that's something that's really important to look at. So it is important that you get the right type of account. There are a couple kind of rules here that we'll get into. First is you can't have something that's like you're doing the work. So you've got this account, you got the retirement, and you're buying property and you're managing it yourself, or you're doing flips or other things inside your retirement account money. That basically is something that you would be managing that yourself, and you can't actually do that. You actually have a property manager. You've got to have somebody else who's actually doing the work for you, so you're not kind of like benefiting from your own efforts and having your own kind of side business with your retirement account. Make sense? And then the other thing is that the government has this thing called UBIT, which is UBIT, or Unrelated Business Income Tax. Government loves to be sneaky here. So you have your retirement account, right, which is tax-free when it's in there. You only pay when there's a sale or you pull money out. You can have money inside of a retirement account that allows for physical real estate. And if you use debt to buy a particular property, the government can tax you when you sell that property based on the amount of debt that you use. I'll give you an example. So let's say somebody invests in a multifamily project with us, $100,000, the money doubles in 5 years, and we used 80% debt to get there. The government can say, okay, well, congratulations, you sold this house, you did a great job, but of that 100,000 you gained, 80% of that debt was used. So we're going to tax you at normal income rates on that $80,000. So that could be, 30% or whatever. That could be $25,000 worth of taxes you'd have to pay inside your retirement account even without taking a distribution. Ouch, that's really painful, right? It's not really fair. That's like a kid coming up in the sandbox and stealing your toys and running away and saying, ha ha, I mean, it's not a very nice thing to do. So the way you can get around that, a couple ways you can get around, is just having the right type of account. So there's something called a QRP, which we'll stick a link in the bio below here, or in the description below. You can also go to my website, Bronson Equity, under resources. You can get a free book for this, but it's called a QRP, a Qualified Retirement Plan, and it basically limits. The government doesn't have the ability to come in and do it. It's not eligible for UBIT, which means you can have debt financed whatever you have in that particular deal. Isn't that kind of crazy? The government, like, they will want to take, if you have gains, they will take your gains, but they will not share in the losses if you have a loss on it. It's kind of crazy, but anyway, that's how the government works sometimes. The second thing is called a solo 401k. So if you have, you're self-employed or you have a business, you can qualify for a solo 401k plan, and that is also exempt of UBIT. So those are a couple things to really make sure that you get the right type of account to invest in real estate. All right, so the second thing you need to do after you create your new retirement account, or you have it set up, you need to move your funds into this account. And I know this sounds really simple. Why would you say that? That just sounds like a very simple step, Bronson. Well, let me tell you, I've raised over $20 million from different investors, and I can't tell you how many times I've had this call where somebody says, hey, I like your deal. It looks really good. I want to invest. And I'll say, great. How are you going to invest? I said, I'm going to invest through a retirement account. I was like, great. Well, do you have it set up? Is everything set, ready to go? Do you have the money there? I said, no, I haven't set it up yet. And I'm thinking like, oh my gosh, this is going to take this person 2 to 3 weeks a lot of times to get this thing set up. So not only do you have to have it set up, but you have to have it funded, ready to go. A lot of deals, I've seen many investors miss out on a deal just because simply they really weren't ready. So the best time to set this up is before you have a live deal and you're ready to go. So if you're watching this video, you're thinking about it already, you should start taking action and setting it up. So get going on that. You can set it up and then that'll be great. So the third thing I wanted to say, a third point here on this, is it's important to find a great passive deal, right? So you have to find something to actually invest in. Now there are many options, but this is the key to investing. So lean in, listen to this. The key to investing is don't do crappy deals. Right? I'm on a roll today. I've got these great quotes. Quote I shared earlier is don't suck and don't do crappy deals. So if you do just, you want to do deals that are good deals, that are conservatively underwritten, that are with great operators, that are, just base hits. You don't need to have just out of the park home runs, but if you just really try to go for base hits with good operators, you're going to do just great. So there's different things you can do. We do multifamily apartment investing. We've been doing that for years. Self-storage is a great option. Mobile home parks. There are many different types of things in real estate. There's other all sorts of alternative investments as well. But those are a few options that I think are really great to be able to get started with. So how do you find out about these great deals, right? It's not just, you get online or you find something online about some group that's doing a deal. One of the best ways to find out about deals is to network with other investors, because they'll tell you, hey, these guys are great, these guys are terrible. They'll give you ideas. You maybe hear somebody speak and you'll be like, I really like their investment approach. I like the way that they're conservative. I like this particular way that they approach these type of deals. So the more that you network, the more you talk to other people, you're going to learn about what sort of deals you want to do. And you're going to have stories to share about deals and people and things that you worked with. You're like, I'd work with them again, absolutely. Or I would never work with them again. So that's another way to do it. Another way is through podcasts. You can listen to podcast interviews. Great way you can find out about new deals, get on people's deal lists. Like I said, you can go to live events. We have a meetup in Southern California. If you're ever in Southern California, we do it once a month, the first Wednesday of the month, about multifamily investing. There's also national conferences. I go to a lot of national conferences every year, and I find out about deals. I find out about new people that are doing deals, that are great operators, and that's a great way to be able to get connected. So check it out. It's really important that you are finding deals that are conservative, that are not, pie in the sky type of, everybody's expecting everything's going to go amazingly the 100% of the time, because that is absolutely reality, right? The things never go wrong. Of course, that's not true. So anyway, I want to share this quote with you. I think it's really good. It's from George Foreman, the guy who did the George Foreman grill and is also a famous boxer. He says, the question isn't at what age I want to retire, but at what income. So for you, I don't know what age you are, but what income do you want to retire at? I was able to actually at age 40, I was able to retire and just do more investing and do videos like this, which I love. Love being able to work with people and work with individuals on doing investing. So if you're interested in joining us in some of our investments, you can check out bronsonequity.com. You can hit the join button and you can learn about our upcoming deals. But basically, what George Foreman was saying is just really looking at how do you grow the income to become more passive. I wanted to share this video with you about when you're looking at what to invest in and what's the problem with investing with REITs. I did this whole video about comparing REITs versus multifamily syndication. You can check it out up here. And so that's important to check out. Another one I did is how do you actually find a great multifamily syndicated deal? So you can check that out up here as well. So take a look at that. I want to know in the comments from you though, how do you think you're going to invest your retirement, or how are you investing your retirement to be able to do well, or how are you finding out about deals? So stick that in the comments below. Helps our community, helps us all to get better. And if you're interested in hearing more about investing, multifamily, inflation, how you can profit during this time, check out this playlist. We'll look forward to seeing you on the next video.